Mr. Mulvaney.
Thank you, Mr. Chairman. I want to go back to something that Dr. Bailey talked about a few minutes ago and that Dr. Jacoby also mentioned, which is housing. I used to build houses. One of the reasons I'm here is that I used to build houses. I've heard a lot of different ideas. We've had half a dozen or so federal programs designed to try and help the housing industry. I agree with you, Dr. Bailey, that this is a crisis within this industry that we've not seen, certainly in my lifetime or my dad's lifetime. I come from 3 generations of home builders. So I guess, since I've got fairly smart people on the panel, some of whom I might agree with philosophically and disagree with philosophically, I'll ask you all the questions. We'll start with Dr. Bailey, and then anybody else come in. What would you do? I'm open-minded to ideas on how to fix the housing industry. And maybe a corollary to that, if you don't have any ideas of what to do, is what shouldn't we be doing? But I'll start with Dr. Bailey, and we'll just take it from there.
I wish I had a better answer to give you. There have been a number of programs that have been tried, starting with the Bush administration, and I think those were generally good programs. The Obama administration has tried a number. There's a new one that's being announced today. I support many of those programs. I think they are trying to I mean, the problem is we have very low interest rates, but people can't refinance their loans or they're underwater from it. So you've either got to wait this thing out for another year until the housing market really comes back, or you've got to start paying off the people who are underwater. And I think there's a lot of, a lot of reasons to be nervous about that. A lot of, you'd end up paying nearly a quarter of the money would go to California, since that's where a lot of the underwater mortgages are. So I don't know that there's easy solutions. I think the programs that have been tried are helping, but they can only do a limited amount, and unfortunately we've got to wait this thing through to some extent. And by the way, I agree with Dr. Jacoby that the financial crisis also contributed to where we are now.
Let me press you to that, because I think that may be where we are right now, which is where the financial situation is also hampering a recovery in the housing market. Specifically, you mentioned low interest rates. There have been low interest rates now for the last 2 or 3 years. Folks are not able to refinance, in large part because of the regulations that exist on banks and what limits they can do on lending. So I hear what you're saying about waiting it out, but unless we allow banks to flush these products through the system, allow housing to actually find a bottom, are we really going to ever get to the end of it? Anybody?
The housing finance system, it's a long discussion. I go back to the days of the thrift lenders and the community lenders and that kind of thing. And a lot of what has happened had to do with the whole secondary market and the disconnect between finance and the actual borrower in the marketplace. And my solution is to tie those two together again. I think you need to create some kind of active community lending where it's profitable for a small bank or a credit union or a thrift to actually make a home loan, deal with the borrower, not have to send it off to some investor, and all of these different processes that go through that have created a major disconnect in the housing finance system. And I don't think you can do that with the current housing finance structure, which is with Fannie Mae and Freddie Mac. So something has to be rebuilt in the private sector that will allow homeowners and people to actually take some risk in the housing market for some period of time. What we've done is we've created a situation where nobody profits from making a home loan, and that is that
you collateralize it, securitize it, package it, and sell it off, right?
Well, and you get a fee in that process, and if you can do a lot of them, you get a lot of fees, perhaps, and refinance fees. But it's just it's a very difficult thing. You need to have community lenders who are invested in the community and who have an interest in making sure that you pay that mortgage loan off and that you start the process over again, because we did that for many years and we destroyed it over the last 20 years or so.
Mr. Farrar?
What I'd like to say is if you try to focus on just the housing sector, then I think there are no good answers. What government inventions will help the housing sector? I think there's no good answers. What I want to urge you to do is to focus on the general economy. If you create a booming economy by following pro-growth measures, then the housing will take care of itself. And so I think that's the basis of the solution. And the bottom line on that is to focus on incentives for production, incentives to maximize investment, production, business startup, business creation.
I don't want to cut you off. I only got 19 seconds. And believe me, you're one of the ones that I would typically agree with philosophically. And I'm wondering if we're in a situation here where it's in a unique circumstance, whereas, and I posit this just for sake of discussion, that our ability to create this environment that would lead to the economy that you've just stated, which is what everybody up here wants, it's a question of how we want to get to that, is severely hampered by the inability of labor to move to where the jobs are, and that the housing market is saddling and anchoring this economic growth that we might be able to find, and that unless we're able to find a way to allow capital markets to function again, to allow labor markets to function again, that we're not going to get to that point. I am not for government intervention for the sake of government intervention. I'm just wondering if there's something that we could do to allow the natural forces of the economy to do what you've just described.
Well, you focus on, see, the four principles of Reaganomics are based on fundamental economics, and that has not changed. And so the key is to focus on the incentives and taxes, regulations, monetary policy. What incentives are they creating? And how does that affect the overall economy? And the fundamentals of economics remain. Businesses still start and exist to make a profit, to act in their self-interest. And so just take advantage of the fundamentals of economics, and you would create another economic boom if you did.
Thank you, sir. Thank you, Mr. Chairman.